Hello, everybody. How we doing today? Had to end the song there. That song lasts for like 5 minutes, so I didn't want to keep you guys waiting. Small crowd today. We're chilling. I'm doing awesome. Thanks for asking. I love just starting the week like this. Like I said with bottom frag this morning. I believe I answered to one of your early executions, right? You just start and you're right on. That just sets the tone for the week, right? And my whole week from that point on is mostly capital preservation. So I'm not trying to force any ideas. I guess the best word for it is really just chilling, laying back down in my seat and only trading the best of the best setups. So it feels amazing as always to start a week like this. It takes away a big part of the stress of the week, right? A big part of the challenge because I'm already making money. Even if I lose my max bullets every day, I'm still ending up making money. So I'm chilling with that specific idea. But yeah, just feeling great today. It is what it is. But just to get right into it, it's going to be a very quick PA review. We will have a quick look, as I said earlier, in general, we will be looking at a continuation entry. This is not something I had shared on Twitter or on YouTube when sharing the Rise model, but I do have a specific rule set for the continuation entry. I'm not even going to put it in the title on YouTube, so you guys will be the lucky ones. If you're one of my students, we have a PowerPoint and a full class incoming with that specific notion. Let me take a sip here and we can get into it. All right. Well, during the weekly outlook, we noted one main thing, right? We are bullish, all-time high conditions. We are looking for higher prices until proven otherwise. And as we've seen with this Monday, we clearly expanded very aggressively higher. I'm currently looking at a 4-hour chart, but if we look at a daily chart, we had, well, actually, I don't see it on the daily chart. We had a 367 handle range and a 71 handle range on ES. So as you can see, we've been in a little market of expansion into consolidation, and that looking at the daily chart, we see the same thing, right? So low resistance liquidity run into a high resistance retracement into same thing. Low resistance liquidity run, high resistance retracement, and so on and so forth. This is what happens when the market is seeking higher prices in a risk on environment. That is something that ICT teaches, risk on, risk off. Oh, that is indeed a great idea. Thank you for telling me at this point. I really do need to get better at this. I'm always forgetting to share my screen. But I was just pointing out the same thing, right? Expansion into consolidation into expansion into consolidation. So now you guys can see my screen, correct? I'm actually gonna change the quality of that very quickly. You guys are on low quality and I do not like that. This should look a little smoother. Just give me a quick confirmation that you guys can now see my screen. All right, all right. But as we said in the weekly outlook, again, only looking for higher prices, at least early week. I could have been looking for manipulation lower into an expansion higher, right? When we talked about the weekly profile during the outlook, I said I'm going to be looking for classic buy week at least until Wednesday. And then Wednesday, I will see if I have to look for a move lower, a reversal lower, or a continuation here. Let me just remove indicators very quickly. Basically looking for that reversal on Wednesday or just a retracement into continuation, right? Classic buy week. And on the classic buy week, the low of the week is made on Monday or Tuesday. And we were looking at what specifically a retracement either into this order block, or if it decided to go deeper, we were also considering, well, I was also considering a turtle soup of these lows if it was to expand on Monday and then Tuesday create the low. But as we can see now, this order block formed a beautiful low of day, and we'll be diving deeper into it to look at it. We had a London framework, so I am going to pop this on very quickly. I believe this is the right one. Yes, indeed it is. And if we head over to 1 minute chart very quickly and actually activate this, which seems to not be working, so I guess I'm doing it manually. Rip the indicator. if we look at our 2 a.m. to 5 a.m. range, that is our London session kill zone based on ICT teaches, right? I am going to note it correctly so that you guys don't get confused the further on we get some drawings. And we have London from here to here. We also had 8:30 news. So I'm going to mark out the 8:30 news as well. And the main thing I want you guys to focus on is this specific highs and lows, right? The London high and the London low, more specifically. And yes, I'm looking at NQU at the moment. I did trade NQM today because the open interest was still higher. Basically, we'll see the same price action, but the prices specifically, right? The prices are a little bit different. See, we barely hit 20,000 on NQM, while NQU is now went all the way up to 20,200 handles. So a lot further. If we look at 9:30, that's precisely when we took out the London lows, more specifically. So we'll head over to a 1-minute chart and look at the London framework, which if we look at right here, we're taking at 9:35. I can allow for New York Open Judah Swing to take out that objective and act like a previous PM framework. If you guys are unfamiliar, made a whole thread around those. I'm not going to go in depth about those, but I was looking for London highs, which were our current objective. But if we look at the New York Open, and as Bottom Frag will know, I saw this beautiful turtle soup, and I'm not gonna lie to you guys, looking at a 15-minute chart, it's not gonna be drawn correctly, but we had a beautiful 15-minute intraday fair value gap that was in the premium of our current range, and I was anticipating a Judah swing lower. So there I permitted myself to trade the manipulation. This is something you have to decide as a trader if you're willing to take the higher risks but smaller trades, right? So I'm scalping these trades and allowing myself to do that. But when I'm trading a turtle soup like this and entering here, I have a stop at the high that it put up. I'm usually entering on the next candle over, have something like this, probably even at this line because I don't want to see it revisited. And most of my position is taken out at this first low. I'm out in 1 minute, 30 seconds, or 2 minutes because I'm taking very aggressive scalps. I just wanted to give you guys a little insight. I believe we also had SMT at this level. Well, we had a little more than SMT, which we are going to dive into. Just wanted to share that because I did share the execution on that, I believe, or maybe I shared a picture of it, so I wanted to give you guys insight. But at that very moment, I was looking for London highs after the London lows were taken out. And if you notice right here, we had clear relative equal levels. This I was framing as original consolidation, meaning I was looking for these relative equal highs right here to be taken as an objective. That was my main objective, followed by the current high of day, which was a London framework. If you look at NASDAQ and ES side by side, you'll see I'm not going to mark out all of them because it is really crazy, but there is a lot of SMT on the highs and a lot of SMT on the lows. What does that tell you? When there is much of it, you lose your edge because that is a broadening market, meaning you are in search and destroy conditions. You are consolidating, you are accumulating, you have high resistance, however you want to call it, whatever the name is. What you understand is that the conditions of the market are not favorable to get to a profitable position. It is that simple. So what do you do at this point? Well, I have a very simple rule. When New York Open is showing me search and destroy, I wait for the opening range to be complete. And that opening range has a first stop at 10, which is the first half of the opening range. So sometimes if I'll see a nice 10 a.m. power of 3, I'll take that trade. And more specifically, 10:30 is the end of the opening range. And a recent friend of mine actually has a whole model simply based on the opening range and how after 10:30, one side of the opening range will always be targeted and you'll always have a setup during that side, right? If you want to backtest that, you can, 9:30 to 10:30 opening range. But if we dive into just the 10 a.m., at this point, you could see price forming an open low into what is that? A unicorn. right? You do have a breaker. We are further in premium than I would like to consider a trade-in, right? If I just pop my premium discount right here, if you are entering based off of this unicorn setup, you are in premium. And if we look at the stop loss, it would actually be all the way down here. And your low-hanging fruit objective would at a maximum be at these relative equal highs, and that is a little too short of a trade for me. But it did offer 2R to your final objective, which means that it would be a good trade. So definitely, if you're trading purely the Rise model, and definitely only based on a mechanical approach, this would be your trade, and you would have gotten scared here coming up, but I would not have been break even if up 1.3R there. This is not a scalping model. It's based on the daily expansion, the daily power of 3. This just reminded me I do want to mark out midnight open so that you guys get some sort of an idea of where we are relative to power of 3 right here. All right, and if we look at this, you'll notice that this trade again formed everything and we did deliver all the way. But what I did want to concentrate on is not this entry, but more specifically the one based on my understanding of basically low probability New York Open. And New York Open to me is the opening range. At 10:30, my specific entry formed. And if you just look very quickly, the first thing you'll notice is this inverted fair value gap, inversion fair value gap, inverted, however you want to call it. And we also had a beautiful immediate rebalance on the retest, the retracement into that inversion fair value gap, which formed my entry. My entry was straight on the retracement into this, and I had to stop right at the low of this candle. But why? Well, very simple. When I don't have a breaker block form, and when I'm talking about this, I am talking about this line. I just noticed that you guys can't see the order block. Let me just mark that out correctly for you guys. This is our 4-hour order block. So this is my higher time frame point of interest. And if I would follow the Rise model, I would like to see a breaker block form here. It formed later, giving you a worse entry. And if you're following the conservative approach, you're in premium of our latest range and you are targeting external range. This would not be a high probability trade setup. So then what do? Do you just miss a move? Well, sometimes you do, but if it allows for retracement into discount of your range, you then have another opportunity. So I will point out the premium discount. I won't even go into OTE levels here. I'll just keep it simple. Premium and discount. For a continuation entry, you want to let it retrace lower and then give you a confirmation of higher prices. Basically, all you want to do is let it respect an inefficiency for you. So instead of trying to pick the specific one where it will reverse, which at least to me this looked a little bit more obvious, right into discount, taking out liquidity into a large inefficiency, coupled with this order block making it very high probability area of reversal, right? If you are wondering what I'm thinking when I'm thinking these stuff, but I don't want to be entering here because I don't want to be turtle souping everything, right? I told you guys about the trade that I was taking, but I want you guys to see a continuation entry. So you had your unicorn there. You had a first expansion leg, taking out external range liquidity, more specifically, right, our 930 highs, and we also took out our data highs. But you still had clear objective, right? You had these relative equal lows right here for partial, followed by your final objective, which was London highs. So you expected to, after a retracement, any move lower is a retracement and any move higher is an expansion. Sorry, that was hard to say, but that's what you're expecting if you have a higher objective. So seeing this move, this retracement, you understand that price only moves to target liquidity or rebalance inefficiencies. And where will it go? It will go to its first discount inefficiency and then continue on its towards its true drawn liquidity. So this inversion fair value gap right here gave you that confirmation of this. If you're looking at pure changes in the state of delivery, just the formation of this order block could be enough and you could be entering on the next candle over. I like to wait for more. I don't necessarily like looking at every single order block because that gets me tunnel visioned. But basically, you could enter here. And to be honest with you guys, after this inefficiency is rebalanced, I don't want to see it revisit that inefficiency. So that can allow for very tight stop loss based on that understanding that this is balanced, and if it returns here, it is going to seek lower prices. But if we use the bare bones approach, you would put your stop at the swing low, have a first partial that would be under 2R, and your final objective at 2.54. So that sounds about exactly the same as the first entry. But in most cases, you're taking the continuation model because you missed the first entry or because the first entry did not give you any clean setups. I do want to bring your attention to one thing I say all the time. I'm always speaking on this because this is something I really do believe in, and it's about time frame alignment. I do want to point out something very quickly that I forgot to mention. We did have SMT, not with YM. We did have SMT at this level, just very clear SMT, adding confluence to the model. But enough about that one. I just wanted to point that out that I missed to tell you guys. Everybody's telling you guys, oh, use this time frame for this time frame for this time frame for this. Even I have made a little chart that tells you, okay, well, intra-week means 1 hour, intraday means 15, blah, 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 whatever it is, right? There are so many rules at some point that people start to forget that price is price. And no matter how fractal it is, every time frame should align for high probability expansion. That's how it is. We are not talking about scalping. We are talking about daily expansions, right? The way my daily candle forms as an intraday trader, you want to catch a piece of that. As a scalper, you want to catch multiple small pieces of that, but you don't really care about the side of the daily expansion because you're going to be trading both sides anyways, right? You are looking for high probability trades, not expansions. But I just wanted to bring you guys' attention, if I remove these drawings and clean it up a little, to this beautiful, I'll actually leave midnight opening price, to the beautiful move that happened in a 5-minute chart. And I actually had a student this morning telling me, well, why don't we execute on a 5-minute chart when the 1 minute isn't clean, right? We had SMT everywhere, we had search and destroy. But the thing is, it's all the same. My 5-minute retracement into a fair value gap after that expansion. So if we're talking pure understanding, you had right here, you had external range liquidity, which I cannot mark out, but let's just say you guys can see it, right? External range liquidity. So you expect a retracement into the discount of our range. And look, we have our first 5-minute discount in efficiency. But if we go to my 1 minute, that's my continuation entry right there. And let me just remove the 1 minute fair value gap. So it's all the same, and you really do have to not lose track of this, because that's when you're going to start going through every time frame, and then one trade idea has to go through 20 things. And even I have 5 charts on my execution charts. You guys can see it right now. They're a little all put some makeup on all of them, but I want my 15 minutes so I don't forget why I am in my daily range. I have my 5-minute just so I can put my this is the opening range, the real trading hours gap, the opening range gaps indicator. So I like to see that on a 5-minute chart, just having all the opening range gaps and its projections. I have SMT right here, higher time frame, so I don't forget to look at the price with my Pyro 3 indicator lagging a little bit. Sorry for the scrolling, guys. And then my execution chart. So yes, I do have a lot of charts here, but notice that I'm never looking for different things on both. And if they don't align, it's because I am doing something wrong. So yes, I just spent 5 minutes repeating the same thing, so I apologize for that. I just got in my head a little bit there. But you really do have to never forget about the simple fact that it's all the same. Time is fractal, whatever, whatever, whatever. All the time frames are telling you the same thing. And as traders, all we are trying to do is catch a tiny piece of the market. So you have to be aligned with what price is doing at the right times, and that has no effect at all on time frames. I could trade a 7-minute chart. I could trade what is it? Let's just say they did half seconds. I could trade a 2.8 second chart and make money because I don't care what I see. That has no effect. It's where is price going? Okay. And no matter the time frame, they're all saying the same thing, right? That's just one thing I wanted to showcase through the alignment of the 5-minute and the 1-minute explanation before. So just a little sauce hidden there, but if you guys rewatch it, I am sure you will understand it. Do we have any questions tonight? Seeing a lot of familiar faces, so I'm guessing that we won't have any, but I am open. I have a little bit of time. So if you guys have any questions, I'm here. Not seeing anything, guessing it was all clear. Awesome. Well, on that note, guys, I wish you all the best of night. We'll see each other tomorrow for the next price action review, hopefully. And I wish you all good luck trading. I'll be in general chat if you guys want to chat tomorrow. Have a great night, guys.